Hello, let's begin with Know Your Worth module, where in just a few minutes, you can value any company using World Data Bank. The Know Your Worth module is used for conducting intrinsic valuation of a company using the discounted cash flow model. The Know Your Worth module can be used for valuing any company except banking, finance, and insurance companies. Please use the Perception module to value banking, finance, and insurance companies. Let's walk through this module step by step. Users have an option to create a valuation plan with DataBank, create a valuation plan without DataBank, or edit an existing valuation plan. Here, we create a valuation plan for Apple Inc. from the World Data Bank. We can change country databank to the respective country or exchange where the stock is listed. Now we proceed after naming the plan. This could be the purpose for which the user would want to conduct the valuation, or the user may enter the date the valuation was created. This example is just an illustration for the tutorial to understand the working of the app. Let's name this plan as on the date of undertaking this valuation, that is 1st December 2022. On importing this from DataBank, all the historic information, macro information, analytics, and computation of cost of equity is pre-filled into the app for the respective company. The data pre-filled is classified, and the user does not have to look or classify any data. This process assists the user to conduct speedier valuations. In the basic information screen, you can see information like company name, prior period, currency, number scale, and risk fee rate are pre-filled in the app. The prior period is usually the prior period ended for which the information is available. The currency is US dollars. Figures are in millions or billions and are set by default. Users can also click the tooltips icon for information and clarity for using the app. The forecast period can range between 1 to 99 years, depending on longevity of the business, brand value, its economic moat, the industry scenario, etc. For Apple, we take a 10-year forecast period, during which we expect the company to earn above its cost of capital. You can click the History icon for historical data and analytics for the company. The assumptions entered in this and following screens are for the cash flow drivers during the forecast period. There is a separate screen for terminal period assumptions. For risk-free rate, the latest 10-year Treasury bond yield is pre-filled at 3.55%, but is open for edit. The user may click the History icon to check the date and yield. You will need to enter the expected inflation rate expected during the forecast period. Ensure that the risk-free rate is greater than the expected inflation rate, as generally, the period term Treasury rate incorporates the expected inflation rate. The user may click the History icon to check the history and compounded annual growth rate of inflation. Here, we take 3.25% as the expected inflation rate during the forecast period. Ensure that the changes, if any, made in the inflation rate needs to be reflected in the computation of cost of debt and cost of equity. You will now need to save and continue to move on to the next screen. These are the cash flows generated are from the operating assets of the company. The screen you come to in cash flow drivers is the sales and growth. Sales for the prior period is pre-filled in the app. Sales figures here exclude the non-operating income. Users can refer the History icon to view sales growth throughout previous years. The sales and growth in the History section shows that Apple has grown by 11.46% CAGR in the past 5 years and by 9.68% during the past 10 years. For the forecast period, users can enter the sales value for each individual year or sales growth percentage. For Apple, we assume 8% CAGR of sales for year ended September 2023 and 10% CAGR from 2024 to 2032. The autofill function helps expedite the process. The next is operating profit. Prior period operating profit is pre-filled. You can enter the operating profit for the forecasted years as a percentage of sales or as values. Users can refer the History icon to view operating profit and margins throughout previous years. The company reported an OPM of 30.29% during the prior period ended September 30, 2022. We assume that Apple's operating profit margin is expected to be around 30% during the next 10 years and sustain. Users can use the autofill function to expedite the process. Please note that the target year operating profit margin is the margin in the last year of the forecast period you expect to achieve and sustain in the long term, and forms a critical parameter in determining the shareholder value and thus needs to be carefully determined. Any growth requires investment into operating assets, be it fixed assets or intangible assets, and net working capital. Do you see the eye icon on the top right? By clicking this icon, you can then view tooltips, which tells you how to go about your valuation. Incremental fixed asset investment is the expected capital expenditure over depreciation. Users can also refer to history to check fixed asset investment rates of the company throughout the previous years. The history shows that the fixed assets to sales ratio for Apple until the prior period is 10.68%. And the 5 years incremental net fixed assets to incremental sales is 12.62%. We assume the incremental fixed assets investment rate to be 12% during the forecast and terminal period. Like previous instances, users can either enter the data as a value or as a percentage of the quote incremental sales. The percentage values can only be positive. There is also an autofill function to expedite the process. The incremental net fixed assets investment rate of target year, which is the last year in the forecast period, is one of the key driver in computing the terminal value and needs to be ascertained carefully. Incremental net working capital is the investment required in the working capital to grow sales. Net working capital is operating current assets less operating current liabilities less non-current operating liabilities. It is given as a percentage of incremental sales. Users can refer to history icon on top right corner of the screen. Apple's net working capital investment rate is taken at minus 11% due to its efficient working capital management during the forecast and terminal period. Here too, you either enter the data as values or as a percentage of the quote incremental sales. Here too, you can use the autofill function. The marginal income tax rate is ideally entered for the forecast period, assuming the tax rate is expected to stabilize to this rate on an average in the long term. For Apple, we have taken this as 21%. Users can refer to history icon on top right corner of the screen to view the cash income tax rate history for Apple. The balance sheet non-operating screen essentially consists of non-operating items that do not contribute in generating operating cash flows. This section also displays the debt, non-operating liabilities, and the outstanding shares as on previous closing day. The non-operating assets and liabilities will need to be added or subtracted from the present value of cash flows from operating assets to arrive at the shareholder value or intrinsic value. Users can view the breakup and classification of the financials by clicking on the history icon at top right of this screen. All items are pre-filled. However, they are available for edit, just in case the user wishes to edit. Users need to review the investments in affiliates, real estate, non-operating, and minority interest to reflect their fair value, as these could be taken at book value. Now we advance to the capital structure screens, which give the breakup of debt and equity. Debt is at book value. Equity is taken at the market value based on the last traded closing price. The app uses market value of equity to compute the debt-equity ratio. To insert the same ratio for the debt-equity ratio, users can just double-tap the mentioned area to copy it, or you can change to the ratio you expect to maintain during the forecast period. The debt-equity ratio is changed for Apple and is assumed as debt at 5% and equity at 95%. Now we look at cost of debt and equity. The cost of debt is taken by looking at the risk-free rate and the default spread of the company. The cost of debt should be based on the currency in which the valuation is done. The cost of debt for Apple is assumed at 5.5%. Enter the cost of equity during the forecast period. Users need to refer the history icon to view computation under capital asset pricing model in the user input column. In the dynamic column of this section, you can iterate and compute the cost of equity based on your assumptions and enter the cost of equity. You can either enter the cost of equity for the forecasted years individually, or you can use autofill to ease the process. Do review the beta with other websites. Users can also deploy other models or just use expected market return, which is an implicit rate of return the investors expect in the stock market. The cost of equity for Apple is taken at 11.21% as per capital asset pricing model as on 1st December 2022. The terminal period is the final screen in the Know Your Worth module. The cash flows of the company continue post the forecast period and thus have value. Terminal period assumptions helps to forecast the cash flows into perpetuity. In this screen, you need to enter your cost of capital and terminal growth assumptions. You will need to enter the expected inflation rate expected during the terminal period. The user may click the history icon to check the history and CAGR of inflation for the currency for up to 30 years. Here, we take 2% as the expected inflation rate during the terminal period. Ensure that the risk-free rate is greater than the expected inflation rate, as generally the Treasury yields should incorporate the expected inflation rate. Here, we take 2.25% as the risk-free rate during the terminal period. This is assumed as inflation of 2% plus real interest rate of 0.25%. You may refer to the tooltips denoted by the eye icon for better clarity for using the app. The marginal income tax rate is ideally entered for the terminal period, assuming the tax rate is expected to stabilize to this rate on an average in the long term. For Apple, we have taken this as 21%. Now we advance to the history of the capital structure, which gives the breakup of debt and equity. Debt is at book value, and equity is taken at the market value based on the last traded closing price. The app uses market value of equity to compute the debt-equity ratio. The history displays the following: computation of debt-equity ratio based on current market capitalization, debt-equity ratio entered by the user during the forecast period. Enter the debt-equity ratio to be assumed during the terminal period in the terminal period screen. The debt-equity ratio for Apple is assumed as debt at 5% and equity at 95%. Now we look at cost of debt and equity. The cost of debt is taken by looking at the risk-free rate assumed in the terminal period and the default spread of the company. The cost of debt should be based on the currency in which the valuation is done and is for the terminal period. This should be greater than the risk-free rate. The cost of debt for Apple during the terminal period is assumed at 4%. Enter the cost of equity during the terminal period. Users may refer the history icon to view computation under capital asset pricing model in the user input column. In the dynamic column of this section, users can iterate and compute the cost of equity based on your assumptions and enter the cost of equity. Do review the beta with other websites. Users can also deploy other models or just use expected market return, which is an implicit rate of return the investors expect in the stock market. The cost of equity for Apple is computed at 9.96% as computed by the app. However, we have reduced the beta from 1.16 to 1 as we expect beta to be around expected market return. Thus, the revised computations comes to 8.9%. Before you enter the terminal growth assumptions, you will need to be clear how you want the cash flows to grow. If you expect the cash flows to grow at terminal growth rate, then enter the inflationary growth and real growth assumptions. Or, if you want the cash flows to grow at expected inflation rate, then enter only the inflationary growth, then enter real growth assumptions as 0. Or, if you want the cash flows to remain constant, then enter 0 for both inflationary growth and real growth. The inflationary growth should be in line with the inflation rate assumed during the terminal period. This essentially is the pricing power of the company and its ability to keep up with inflation. The user may click the history icon to check the history and CAGR of inflation for the currency for up to 30 years and also refer to the inflation entered during the terminal period. Here, we assume Apple's has pricing power and hence the inflationary growth is taken at 2%, which is as per the expectations entered during the terminal period. The real growth expected into perpetuity should take into account the country GDP growth rate, industry growth rate, and the world GDP growth rate. The user may click the history icon to check the history and check the CAGR of GDP growth for the country and the world for up to 60 years. Here, we assume Apple's real growth to be in line with the world GDP and hence the real growth is taken at 2%. You will need to ensure that the terminal growth is not greater than the weighted average cost of capital for the company. This screen displays the results of valuation. Users can view the shareholder value and the shareholder value per share of the company. We can see that the shareholder value per share for Apple is $178 per share based on assumptions entered as on the date of this exercise, and the current market price as on 1st December 2022 was $148 per share. For a detailed analysis, users can also click and review reports on free cash flow, valuation reports where you can see the present as well as the future values play out on the basis of your assumptions. Users can either email the reports from here and share valuations with other subscribers in the app format. The users can also read our book on, quote, the art of intrinsic valuation, which can be viewed by going to the side menu on the top left of the home screen. The card displays in the module screen displays a summary of the latest 10 completed valuations. On click of the card, the user can edit the valuation, directly go to Show Report, create a new plan using existing data, or delete this valuation plan. Thank you.